Neha. Thanks a lot for that. With that, let's talk about the stock on our radar right now. The management of Kaynes Technology is joining in. Remember, the company has made its debut today on the bourses with a listing gain of almost 30-odd%, still sitting with gains of 18% over and above the issue price of 587. We do have with us the Managing Director, Mr. Ramesh, and Savitha Ramesh, who is the chairperson of the company. Thanks a lot, ladies and gentlemen, joining in for this. And congratulations on what seems to be a good listing, and welcome to the stock markets. But now is where the real journey begins, because now everyone will be eyeing what you guys do in the future. And that really is my first question. You know, I mean, you have an order book of almost 2,300 odd crores, which you have said will be executed over the next year and a half or so. Just wanted to understand your order inflow pipeline for the remainder of this year and next year as well. What kind of order inflows are you targeting?
We are seeing similar order inflow for the months to come in. I'm also seeing our marketing team is able to take into newer contracts, and whatever growth we have projected, I'm very, very confident that we should be able to do that.
Okay. All right. If you could just revise Mr. Ramesh and Ms. Savitha, thanks so much for joining in, and congratulations. We like investors to make a lot of money, and y'all have started off on the front foot, smashing it out of the park, so to call it. But you're saying you're looking at revenue growth. So could you tell us what is the outlook for this year? And also, I was noticing your margins have steadily been improving. So what's the margin band we should be working with? Go ahead.
We are expecting to do about 1,200 crores of revenue this year, and on the margins, I would like to say that our strength is diversification, and since we are in the diversified verticals of business, and there is a very good mix between the automobile, industry, and railway verticals, we are sure that we will be able to keep our margins going strong.
All right. If you could define what is strong, would be great. You know, you are currently in low teens. Was wondering if you guys could go, above 14%, 15%. And I ask this primarily because you plan to invest in backward integration as well. By when does that come on stream, and how much does that, support your costs by? Can you give us a sense?
We will be putting up the backward integration plan. That is, we are looking at a bare PCB plant, and that will be within the next 12 to 18 months, the plant will be ready. And with that, we feel that there will be a slight improvement also in the margin, because currently we buy about 8 to 10% of the bare PCBs as our raw material, and this is going to help us also improve on the margins.
By how much, ma'am?
By another 1%.
Okay, so by FY25 odd, your targeted margin will be how much?
We are targeting to improve our margins to up to about 14.5% by FY25.
Noted that point. What about exports? There seems to be an opportunity out there as well. It's been in the vicinity of around 20 to 25%. Give us a sense about exports. How do you see that contribution moving up? And also tell us, you'll import some part of your raw material, you're also exporting. So net, this rupee depreciation, is it good or bad for you all?
Coming to the export market, though the markets are talking about recession globally, but we are continuously monitoring. Every month there is a team meeting up with the export clients to find out what the status is. So far so good. For us, everything has been favoring us. Since we have marquee clients, from their exports to get through is easy, because whatever we developed here, it is for global requirement. So that is one advantage of this business. And globally, this has grown like this only.
But can you specify what kind of contribution can it do? I mean, it's good to hear that everyone's talking about a slowdown. You're not witnessing that. Goes to show some bit of a strength in your business. But what will the contribution be on exports, and also the margin difference between exports and domestic business?
See, because of the exports, there is a natural hedging. So that is the only benefit I am seeing. Otherwise, exports versus domestic market, the margins are almost closer to that. Having said that, domestic market is in a fast growth rate, because many of our clients want to localize things, so they want to stop imports. So that is benefiting industries like us, thanks to the government policy makers.
Right. Mr. Kannan, you joined us when the IPO opened about 10, 12 days ago, and you did speak about strong potential in your medical electronics business, which currently is about 1%. You said it could scale all the way up to 8 to 10%. Just wanted to understand, I mean, by when does it scale to 8 to 10%? Secondly, will that be done organically or will that be done inorganically? Are you looking at some people there? And thirdly, what does it do to your margins? Is this a margin accretive business for you?
See, what we are going to do is we are going to partner with companies and take this business forward. We have also aligned with the partners in the Europe as well as in the Asian origin to get in more and more customers. We are in the last stage of finalization with a large client. So this will take our business to around 5 to 6%. Plus locally also we are looking at medical business being grown.
Okay, that's about...
Medical business normally is with the higher margins. Always 3 to 5% extra than the industrial verticals and automotive verticals.
So this year you will end between 3 to 5% of your overall business by medical, and 8 to 10% happens by FY24 or 25?
25, okay. Because these markets to develop, it takes long time. The gestation period is very high.
All right. Sir, the buzzword has been defense. You're on the offense today. But, from defense, aerospace, outer space, very small proportion of your money is coming in from there. How do you see this vertical move up? Because clearly there's a lot of growth out here and a lot of focus on this space here in India. Go ahead.
On the aerospace defense market, we are a player. Only thing is our turnover in other areas are going up. Because of that, it is hovering on around 2 to 3%. However, I am confident by FY25, this will touch a 10% level.
Interesting, because 10%.
Because we are working on new product development. We are working on new product development for our clients, and which should be completed in a year's time.
That will be interesting. 10%, 8 to 10% coming in from medical, 10% coming in from aerospace and defense, etc. And the remainder of the business, I presume, would stay in the similar proportion as it is right now. Final question from my end then, and this one to you, Mr. Ramesh, that, the proportion of your business which is dependent on sourcing from Taiwan, just wanted to understand, I mean, what are you doing to de-risk that? Because going forward, if there is any geopolitical problem, your business stands to, lose from that, right?
Yeah, basically the process of de-risking that we have done for the shortage of components coming in from Taiwan and China is that we have focusing on a longer lead time order book, and this helps us to ensure that we get the components in time and we can do the delivery faster to the customer.
How much comes in from China right now, and how much do you...
in the event?
About 10% of our total buy is from China.
Okay. Go ahead, Mr. Kannan, you were saying something.
Yes, in the event of any geopolitical situation also, 3 to 4 months we are fully covered. So we are also looking at various other methods of finding alternate buying path, which we are working on. Nothing is still done yet.
And is all of that covered in the contracts that you have to clients, in the sense that, for instance, if there is anything and there is an absurd rise in the price of things that you buy, are you able to pass it on to consumers, or will you take a margin hit on in that situation?
Yeah, there is a passover to the customers. So whenever there is an increase in price, the buying price because of non-availability of components or because of the increased lead time, we work with a PPV, that is a purchase price variance, passover to the customers.
Okay, all right. Thanks so much for joining in. Wishing you all the best. It's been a good debut for you all, and we look forward to chatting up with you rather soon. We're going to hold you all onto these numbers, expecting margins to improve to around 14.5%, ending the year at around 1,200 crores, and things looking up from here on. Well, on that note, though, we'll slip into a short break. You come back, we'll continue our focus on markets and stock-specific action.